Right now is the perfect time for smaller property investors to get involved in commercial property. My name's Ranjan Bhattacharya. I've been investing in property for over 30 years and in commercial real estate for more than 20. In this video, I'm going to explain exactly why right now is a perfect opportunity for smaller investors to capitalize on the opportunities in the commercial property marketplace. If you're new to this channel, make sure you subscribe and hit the bell icon. We put out new videos each and every week. They're all dedicated to helping you be more successful in property. Like as well, it helps us out on YouTube, and comment whatever you think about the video. Tell me in the comments below. If you've got any questions, I'll do my best to answer them. Now this particular video is a talk I gave at a network auctions event in Mayfair, London. And it was a live talk in front of a live audience, and it's all about, as I said, how smaller investors can capitalize on commercial property. Stay tuned till the end, and I'll share with you how you can learn a lot more about my commercial property investment strategies. So I'm going to share with you my view on commercial property. As I said, I've been investing in residential property since 1990, commercial property since 2001. And I'm going to share with you a couple of things. First of all, why now there is so much flux in commercial property. And that flux, that change, represents a once-in-a-lifetime goldmine opportunity for small-time investors that never really happened before in previous trends in commercial property. I'm also going to share with you my two guiding principles, my underlining principles for any commercial property investment. And if I have time, I'll shove in a couple of examples as well. I do a bit of YouTube, so I've got 10 minutes. Everything I'm going to talk about, I'm going to refer to other videos that we've got on YouTube. Anyone watch my YouTube stuff? A few hands going up. So do subscribe and all of that. We're now the third largest property YouTube channel in the UK after less than a year. About 12,500 subscribers. They can't all be wrong, so get on there and watch that. Now, residential tenants. You have all sorts of problems with residential tenants. I quite like having these guys as my tenants. They're a lot easier to manage. They don't mess up the kitchens in your HMOs, and they generally pay their rent on time and all that sort of stuff. I think what drove me, if you like, to commercial property was the fact that residential property, at the end of the day, needs a lot of boots on the ground. They don't have to be your boots on the ground. You can use managing agents, but still you have to manage the managing agents. Now, what I find that in our own portfolio, about 70% of our rent roll is residential, about 30% is commercial. The commercial stuff literally just takes me an hour to a week. The residential stuff takes a lot of management to do. That's how you can get hold of me. Some of the videos that kind of back up this talk, I'm going to give you an example of how you can create value from high street shops. And that's all covered in that video, No Money Down Commercial. I really believe there's tremendous value in UK high streets right now. And in this video, I share my 5 golden rules for investing in high street retail property. I've also got stuff on office to resi conversion and doing commercial property, no money down. Now, there's a lot of hoo-ha about no money down. Now, a lot of the no money down techniques actually originated in the commercial property arena. And they were kind of tweaked and messed with, if you like, to try to make them or shoehorn them into a residential context. But a lot of no money down strategies were born in commercial property and work best in commercial property. And that's what I sort of go into on that video there. So what am I going to talk about commercial property? Well, why commercial property, first of all? Commercial property, I got into it because of the length of the leases. The trouble with residential property, you've typically got people in for 6 months. With commercial properties, you've got 10-year leases. You've also got great cash flow, because typically rents are paid quarterly in advance, as opposed to sort of every month. I got into it as a great way of doing school fee planning. You get 4 rent paydays, so that's 3 payments to cover the 3-term school fees, and 1 to cover the family holiday. And it seemed like a great idea at the time, and I just sort of built up on that. The other interesting thing is the lease. They're full repairing and insuring leases, and that means the tenant is responsible. Now, we've had the recent storms, and I'm sure a lot of you who are portfolio property owners get very worried when there's a little bit of bad weather, because you know your phone lines and your emails are going to be deluged with this fence has fallen down, this gutter needs replacing, this TV aerial has fallen off the roof. We had all that on the Monday morning after the storm. We had a tenant in a commercial shop of ours, and they sent a picture saying, the shop sign had blown off, basically. And we just sent an email back saying, check your lease, it's commercial, it's full repairing and insuring, we'll leave it up to you, mate. Nothing to do with us, Gov. That's the kind of benefit, if you like, of the ease of management of commercial property, which is worth taking into account. A lot less regulation. A lot of the commercial property rents that we have, the buy-to-let commercial property that we have, is governed by an Act of Parliament in 1954, which is before I was born. Buy-to-let regulation for residential property is being tinkered with every month, it seems, and it's all going in the sort of tenant's favour. Stamp duty is much cheaper for commercial transactions. I've got a whole video on that. There's no 3% surcharge, and that can be beneficial. The other little angle is, if a commercial property is mixed use, so let's say you've got a shop and residential uppers, the whole of the property is counted for commercial stamp duty, which can be a big saving. So let's just talk a little bit about the uncertainty and what's happening with commercial property and why I think it's a great opportunity for the small-time investor. Now, commercial property exists to aid commerce. That's what it's there for. And all the time, businesses change. A couple of hundred years ago, the railways came in, and a whole bunch of commercial properties on the sides of canals became defunct. In the 80s, for example, when manufacturing was more competitive to be done elsewhere, a whole bunch of factories shut down. And these presented great opportunities for developers to repurpose those buildings. Now, the thing with every change in business that's happened, and commercial buildings becoming defunct and having to be repurposed, they have tended to be very large buildings, so only large developers could profit from them. So in the 1980s, if a Docklands large building, 20,000 square foot, is no longer fit for that commercial purpose, a small-time developer or investor cannot capitalize on that opportunity because it's just too big for them. Yeah. What we have now is a massive change in the way business is being done over the internet, and I won't go on to that now because we all sort of know about it. But what that means is whole swathes of commercial properties are no longer fit for their original purpose, and they are great opportunities for small-time developers. Because a lot of stuff I'm talking about, like the small-scale shops and uppers, high street properties, which can easily be repurposed, is not attractive to larger developers because it's too small for them. And there is this massive open goal of opportunity where larger developers are looking for big stuff, and smaller buy-to-let investors are still thinking about residential properties. And there are these small sites that are ripe for conversion. I've got a guy I run a mentorship program on commercial property investing, and I've got a guy on my program who's bought a property which actually came to me. He bought this office building which is converted into 3 flats about 5 miles away from St Albans in a very sort of prosperous area. We got a video on it on YouTube before and after, so you can track that little story. But the interesting thing about that deal is the agent, the commercial agent, is actually one of our tenants, is one of our commercial tenants. I saw that deal opportunity before he did. But it wasn't, for me at my stage in my journey, it wasn't something that I wanted to get involved in, because it was a relatively small building which he could convert to 3 flats. But for someone who is starting their commercial journey or starting out with small-time development, it's an open goal opportunity because no one saw it. It was still on the market for a couple of months. It was on the market for a couple of months. He's picked it up. He's converted it into 3 flats. He's sold the last one now. He's made about £300,000 from it, And he's learned a huge amount because the learning you do from doing these small sites scale up. Because all the stuff that John mentioned about project management and everything he mentioned is absolutely true. But learn that craft on a smaller site, and then those skills you take forward to the larger site, and you will do much better without and risking less, if that makes sense, yeah? So there's an opportunity like never before, in my view, that for the first time, certainly in my lifetime, we're seeing commercial buildings becoming defunct, and the types of buildings that are being defunct are very accessible to smaller developers. Over the next few years, for example, we're going to see more than half of betting shops being shut down because of changes in their regulation. If you think about most betting shops, they're very simple shops and upper spaces. There are permitted development rights that allow you to convert some of that space into residential usage without the needs for planning permission, which is vague and uncertain. Permitted development is definite, and it's certain. And I've got plenty of videos on permitted development and how you can harness those opportunities. How long have I got on my YouTube? 2 minutes, 2 more minutes. Okay, so 2 principles that I always look for with every commercial property transaction that I look at. It's got to start with the demand. Who's going to occupy it and what they're going to pay you for? So whether that's a residential occupier or a commercial occupier, there's got to be someone willing to pay to take that square footage of space. If I am buying commercial property for commercial buy-to-let, or because there's a commercial tenant in there, I will only do so if there's a plan B. I've got to be able to do something else with that property if that business disappears. My last deal was a couple of months ago, picked this up at auction. It's a tyre and exhaust centre near Gatwick. Great little property. Now, I'll just explain a couple of things about it. First of all, rental demand. It is very hard to get planning permission to have a tyre and exhaust centre in a residential area. So once you have a site like that, it's very easy to re-let it to another player who wants a location, because the locations are hard to come by. Even if they do pack up, there are great development opportunities from a corner plot, and a corner plot that already has massing on it. When you have a tyre and exhaust centre, these sort of things are nearly double height because you've got to get ramps to sort of go up and all of that. Also, we checked out the demand. When I look at a commercial property and a tenant, you know, when you evaluate a residential tenant, you look at what job they do. It's what income they've got. With a commercial tenant, you're looking at the business. How sustainable is it? I tried to book my car in there to replace the tyres. I couldn't get an appointment for at least 10 days. So you know that there's a reasonable demand for that area. So there's rental demand, and there's the backstop that if it did become vacant, there is easily realizable development potential. And finally, the rental on it. The thing about commercial property is your gross rent yield is pretty much bang on your net rental yield, because you don't have any costs. They pay for buildings insurance, they pay full repairs, there's nothing to do on there, really. So we bought it at auction. We've just negotiated a new fresh lease because it only had 1-2 years left on the lease. So we negotiated a new one because the guy basically wanted more long-term security. He was worried that someone's going to buy it and redevelop it. So we negotiated a new lease, 10-year fresh lease, with an increase in rent, and we've come out of it with a property which is 8% yielding. Now, when I look at the what you would have to do, say, with an HMO, and I do HMOs. We have more than 150 rooms. I'm in that business too. But when I look at the work involved in getting 8% yield out of residential property, and I look at this place, which I've been to once, and really has just been a couple of phone calls with lawyers and stuff and surveyors to get done, it is a lot easier. So commercial property, open goal of opportunity, think beyond residential is my message to you guys. We've run out of time. Hope you enjoyed that video. If you want to learn a lot more about my commercial property investment strategies, I run a very unique 2-day workshop event, which is actually more than that. It's a 2-day workshop, and it gives you 90 days worth of support in implementing my commercial property investment strategies. You can find out all about it at bakerstreetworkshop.com. The website is at the bottom of the screen here. And if you enter a special promotion code, Ranjan, R-A-N-J-A-N, at the checkout, you'll get a special discount as well. So I hope you enjoyed this video. I hope you join me at the workshop, and happy property investing.